What's up, everybody? I am in the screen. I'm back. It is another Monday edition of YouTube Live on Everything Phoenix. We are talking December real estate in Phoenix. That is interesting, right? Because in most places, you probably would probably guess, I guess, what December is going to be like in that city for real estate, considering most cities across the country are cold in December, but Phoenix is not. So, what's that like here, and what to expect this month for Phoenix real estate? We're going to talk about that and jump into that here in a second, but also too, what's going on with Gen X? What are the trends? What Arizona specific cities are they looking to move or have moved to the most? That's important potentially. Now, this is Gen X. This is not millennials. And Gen X obviously is not as big of a home buying group as millennials right now. In fact, millennials is the largest of all of the population groups when it comes to home buyers currently in America. But in Arizona, Gen X is the big one. And where are they buying? We're going to cover that here. And also, too, the Phoenix home sales. What's going on with the sales for the Phoenix area and the economy altogether? The article suggests maybe not to be fooled by what's going on currently in today's US economy. So we're going to dive into that and more. I'm super excited about this edition. It's Monday. It's the best day of the week. And we're going to jump in right now and get this party started. So I'm going to share my screen with you, as I always do, guys. And we're going to talk about listings under contract, or maybe lack thereof, or listings that are not actually under contract, because there are quite a bit of those as well. Now, if you look at this graph, it's not the most encouraging. Let's just be honest. If you look at it quickly, you don't read and dive into it, it's not the most encouraging. And even when you dive into it, it's not the most encouraging. Let's be honest about it, okay? Let's see what Crawford Report has to say about listings currently under contract in December 2nd, as of December 2nd here this year. The typical 30-year fixed mortgage rate has dropped significantly since October, falling from 7.92% on October 30th down to 7.09% on December 1st. Almost a full point, guys. If you look over here at the mortgage rates, you can see here that in our graph, the rates have come down. And you can see right now, it is actually up to 7.11 as of about 3 minutes ago, because as you know, rates always fluctuate. But why is this happening? Why have rates gone down even though the federal funds rate has not moved? The Federal Reserve has not moved the federal funds rate, guys. Now we know the federal funds rate is the overnight bank borrowing rate between that banks borrow money from, etc. And so that plays a huge role in it. But again, whether the Fed moves the federal funds rate up or down doesn't necessarily going to make the mortgage interest rates move accordingly. They can fluctuate usually around the same lines, but they can go up and down even though the Fed does nothing with the rates. However, when Jerome Powell speaks, when some of the board members of the Fed speak, this will move the markets. It does. Markets react, people are emotional, and the bond will move with it as well. So now you have a situation where the Fed came out and said they're probably not going to move rates, obviously, the rest of this year. And now there's speculation that the Fed is going to move rates down early in Q1 of 2024. Now, it's speculation. And so a lot of people are thinking, a lot of smart money is actually, I don't want to say betting on that, but they're stating that's the case. And so we'll see what happens with that here as we go into Q4. But what we know right now is that rates have come down from a whole point almost in October, which is awesome. Now, going back to this chart, let's read what the Crawford Report has to say about the listings being under contract. You can see with the graph, it's going in the wrong direction. You might have expected this significant drop in the cost of buying a home to result in a jump in the number of people contracting to do so. There have been some reports of a jump in mortgage applications, which is true. But as far as the ARM list, the MLS database for Phoenix is concerned, the number of listings under contract is distinctly underwhelming, with 5,817 as of December 7th, well below 2022 number. Now, guys, 2022 was not a banner year by any stretch of the imagination. It was not a good year. It was slow in December of 2022. And now we're looking at a market in December of 23 that could be a little bit slower. So you can see right here in 2022, we ended the year just under 6,000 listings under contract. And we started the year just around 5,500 as of January 1st in 2023. And then look what happened here. From January 1st through February 1st, approximately, you saw about a 35% increase in this number last year. Now, you also see something very similar in 2022, right? You see it go dip down to about 9,200 homes or sell, listen to the contract in 2022, back up immediately by February 1st, about 23% when you factor in these numbers, which I've already done for you guys. So that is a huge increase of properties selling because demand rises to meet those needs. Now, we're hoping that nothing changes this year in 2024 and that January is a good month, which it typically is, for demand to significantly increase and therefore more homes sell. But keep in mind, guys, keep in mind, remember, 5,500 approximately homes selling or listings going under contract in 1 month is still 5,500 homes selling. It's a lot. Now, it's not 8,000, it's not 9,000. And in 2021, there were a few months that were 11 to 12,000 homes in 1 month going under contract. But it's still significant. It's a lot of homes out there. And the good news is for those home buyers that are looking right now, they're serious. They're not going to look at a house if they're not serious about making a legitimate bona fide offer on a property. So as a home seller, that gives you a good indication that you're not wasting your time because there are tire kickers out there throughout the year, unfortunately. That's just part of real estate. So be encouraged because of that, is what I'm saying. That if your house is on the market right now, last week we just had dozens of showings on the several properties that we are marketing right now for our clients. So they are occurring, they are happening. And we've actually went under contract last week with 2 properties. Homes are selling. It's happening. Okay. So now, if you go back to the graph, you look at a few areas that have perked up, but others have shown no enthusiasm at all. And overall, we describe buyers' reaction to the reduced rates very muted. Now, I thought about titling this episode "Muted Response?" because I like that word. I think that's what's happening right now. Buyers are sitting there going, "Yeah, okay, the rates moved almost a point, but overall, I'm still going to sit here and kind of maybe figure out what's my next move is going to be and wait." People love to wait. Speaking of which, perhaps they're waiting for the new year. And per this chart, that's usually what happens for a lot of people. And you have a lot of seasonal buyers too. That's just what it is. Now, if you go back to November 30th here, this is the latest table for the Cromford Market Index. And as you can see, guys, I'm going to zoom in a little more here if I can. Okay. As you can see, there is movement across the board. Now, Goodyear, for some reason, continues to go up 2 weeks in a row. I don't know why. Cromford does not know why, but they're strong. But let's talk about other markets that are doing fairly well. Right now, even though Goodyear stands out as the major improvement, you still have Chandler, Fountain Hills, and Tempe doing really well, even though they're going down with the CMI percentage. Scottsdale and Buckeye have improved over the last week. That's good. 9 out of 17 cities are still sellers markets, with Paradise Valley and Peoria in the balance zone, while Cave Creek, Surprise, Buckeye, Goodyear, Queen Creek, and Maricopa are all in the buyer's market area. Okay. Maricopa and Queen Creek have dropped below 70. So if you're an investor, listen up. You might want to consider Maricopa and Queen Creek because they're low right now. Even Buckeye too, right? 67.5. So the deal is probably more apt to be better. One thing you have to check though are rental rates. Are the rental rates decreasing in those cities specifically? And guys, we can run the numbers for you. Give us a call, 480-660-5974. We can run numbers very specifically for you so you know exactly where the rental rates are for your zip code and or your suburb or city, okay? So if you're thinking about buying a house, you can go right now and in Buckeye, for example, it would be a good time to buy. But if you're an investor, you got to check rental rates. If you're a homeowner and you want to live in Buckeye or Maricopa and Queen Creek, I would not wait, guys, because as you can see on my screen, this graph happens for every single city between January and February, every single place across Phoenix, every single year. Okay. So I would keep that in mind. Give us a call. We'd love to help you out and walk you through that. Okay. Going back to this chart, you can see those are the numbers one more time. Now, that all being said, I'm going to talk about the economy real quick. Okay. This guy's viewpoint, which I thought was pretty good. Don't be fooled by the hot economy. So let's talk about this, okay? The Bureau of Economic Analysis. Now we're not going to get really, that could get boring really quick, okay? So I'm going to do my best to just get through this, the highlights, right? So you guys know what we're talking about here. Said that the U.S. grew at a rate of 4.9% during the third quarter. During the second quarter, GDP growth was 2.1%. Numbers from the world's largest economies are not out yet, but I'm guessing that other than India and possibly China, which grew 5% on annualized rate, but is now faced with economic crisis. Did you know that in China? They won't talk about it, but it's true, guys. No other economy was hotter than apparently the US's. What's driving this growth is that consumer spending, which accounts for more than two-thirds of the US economic activity, accelerated 0.7% in September and 0.4% rise in August. Spending of services shot up 0.8%, boosted by international traveling, housing, utilities, healthcare, airline, transportation services. Here we go. Now, here we go. Fast forward just 1 month later in October, and consumers are staring at 20+% in credit card interest rates for unpaid amounts. Guys, did you know that credit card debt is at the highest rate it has been in America currently? Okay. 8% mortgage rates, 7% auto finance rates, and a minimum of $500 monthly student loan payments. For the consumer to spend, it is more likely they will go into further debt as we draw closer to holiday shopping sprees and see the season and sprees, right? The most recent numbers released by the Federal Reserve Bank of New York show exactly that. The report finds that household debt has risen to $17 trillion with about $1 trillion in credit cards. That's not good. That is not good. Typically, the mortgage is the most significant debt burden for Americans, which stood at $12 trillion during the second quarter. So consumers are amassing debt, but are they paying their debt on time? Whether it can be credit cards, auto loans, mortgages, etc. Okay, the answer is no. The answer is no. Vanguard Credit Gauge, a credit risk tool developed in partnership with the nation's 3 largest credit reporting agencies, reported that early stage delinquencies spiked from 0.84% in August to 0.91% in September. Okay. What may be more concerning is that after prolonged stability, mortgage delinquency rates are beginning to inch upward again. However, guys, in Phoenix, foreclosures, not happening. Not an issue right now. Could be in 6 months, maybe, probably not, but maybe. Highly doubt, but maybe. You never know, right? I don't have a crystal ball, but the economics would say no, okay? But mortgage delinquency across the country is increasing. The national delinquency rate for September reached 3.29%, marking a 12 basis point rise in August, okay? And a 13 basis point rise year over year. Okay, for auto loans in September, the percentage of auto borrowers who were released 60 days late on their bills rose 6.11%. Okay, this marks the highest default rate since 1994. Okay, I hope you guys are hearing this. All right, the big part of the reason for these defaults is the monthly car payments, which have risen sharply ever since interest rates started climbing. Financial Times report concludes 1 out of every 5 car owners with a loan has a $1,000 monthly car payment. Wowzers. 1 out of every 5 car owners have a $1,000 plus monthly car payment. So, what will the fourth quarter look like when numbers come out in late January? And if you are thinking that the economy will grow by 4 to 5%, I would also like to know the growth in the debt levels of the American consumer. When the labor market is so strong and with a large cross-section of workers under impression that finding a job is really not that hard, spending is likely to continue, whether people can afford it or not. But overzealous consumerism, especially as we approach a period when retail spending is at its highest level, can spell disaster for businesses in 2024. Okay, it was encouraging to see the third quarter GDP growth, but we may have reached the peak for the next few quarters. All right, guys, I'd like to know what your thoughts are on that. If you would comment below and get engaged on this conversation, I would love to know what that is, okay? Because I tend to agree with the facts. Those are some facts. Does that mean disaster for the U.S. economy? No, I don't think so. I mean, it could, but I don't think so. But these are some facts when you have so much debt. What do you think, based upon those numbers and those facts, is the most likely thing the government could do in order to have that bubble burst, or not burst, to avoid that catastrophe? Well, I think right now the answer is very straightforward. One of the reasons these delinquency rates are occurring is because the monthly payment is too high. It's too high because, not because prices of cars went up by 75% over the last year. Obviously, everything's gone up because of inflation, but it's primarily due to rising interest rates to fight inflation. If the rates come down, delinquency rates probably should go down too and get lower. So and then you take an election year next year coming up in 2024, and all the signs would point that rates are going to start coming down. And probably, honestly, I was thinking maybe end of 24 into 25. And the more I read about this and research about this, guys, I think it's going to happen sooner than later. And you're looking at probably the first half of 2024, possibly the first quarter. So where they'll go to, who knows? I don't think it's gonna be anything crazy. We're not talking 3%. I mean, something has to really, really go bad for that to happen, really bad. But I think probably somewhere in the mid fives is where this is going to end up by sometime at the end of 2024, if not sooner. Okay. And again, just my thoughts based upon data, not my opinion based upon my emotion. Okay. Very important to distinguish those two things. Okay. All right. Gen X, where are they moving? Two Valley cities among top destinations for new Gen X residents, the report says. There's the great state of Arizona, the Grand Canyon State. We welcome you. Here we go. One Valley City is the nation's top destination for Gen X movers. The nation, okay? And another Arizona municipality is among the top 5, according to U.S. Census numbers from Smart Asset. The report found that the city of Surprise had the highest percentage of Gen Xers among new residents who relocated in 2022. The city gained 4,400 new residents from that group, and Gen X now makes up nearly 12% of the city's 152,000 residents. Surprise and a few of its West Valley neighbors among the nation's fastest growing cities over the past 5 years. Here we go. Just a couple spots down was number 3, Scottsdale, Arizona, where 6,200 Gen Xers took up residence in 2022. Gen X now makes up roughly 13.7% of Scottsdale's 240,000 residents. Bend, Oregon was at number 2, Orlando, Florida, number 4, and Fort Lauderdale, number 5, rounded out the top destinations. Bend, Oregon, that's an interesting one. I don't know what that is, but let's see if they have something to say about that. Gen Xers are defined as the report of people 45 through 54. The report noted that people in this group may have an outsized impact on local economies compared to younger groups because their careers are more likely to have more advanced and their investments have more time to grow. That makes sense. Only 2 other Arizona cities made the top 100 list of Gen X. Tucson came in at 24, and its new residents coming in from Gen X, while Peoria came in at number 47, okay? So you have Tucson, Peoria coming in behind Surprise and Scottsdale. As for the millennial report, here we go. Tempe was the only city in the top 100. That's interesting. That's very interesting to me. I think a lot of the cost of living has something to do with that. For both the Gen X and millennial reports, Smart Asset looked at the 2022 Census Bureau one-year American Community Survey data for the 268 largest cities, okay? The Grand Canyon State had the 4th highest in migration gain in the U.S., bringing an estimated 282,000 residents from other states between 21 and 22, while losing 204,000 to other states, leading a net migration gain of 78,000 people. That's phenomenal for the Grand Canyon State, our lovely state of Arizona, guys. So what do you think about that? That's interesting, right? Only one city made the top 100 for the millennial home buying group, and that's Tempe. Interesting. Something to do with the demographic age of Tempe, because a lot of people in Tempe are a little bit younger. Home of Arizona State University. Okay. All right. So let's move on to multifamily. This is interesting, guys. Multifamily will face a critical test in 2024 and beyond. This is interesting. A lot of people have invested over the years in multifamily units. A lot of people live in multifamily units. So what's going to happen to this? All right. Rents nationally were up 2% year to date as the third quarter, according to RealPage Inc. But the firm predicts this year, in 2023, figure could come in below that amount. So that could be good if you're looking to stay a renter in these properties, not so good if you're an investor in them. Long a darling of commercial real estate industry. I love the way she started this article. The rental housing market is showing warning signs as slowing rent growth and demand, higher interest rates, and greater operational expenses test multifamily owners and developers. Okay. The U.S. apartment market absorbed 90,000 units in the third quarter, according to RealPage Inc. While that's an improvement from the negative absorption seen throughout 2022, the approximately 1 million apartments under construction, nationally as of the third quarter, is still outpacing demand and tempering rent growth in many markets. Hey, Robert, how you doing? Thanks for providing great content. You are more than welcome, sir. Thank you for spending your time. I know it's valuable. on watching the show, and we try to keep it action packed so that you know what is going on, especially locally here in Phoenix. Okay, let's continue this information. This is good stuff. Um, on top of underwriting loan standards written during the different economy and multifamily market, this is going to create a financial headwind for some owners in the coming quarters, especially in deals financed in the past 2 years with floating rate debt. This is not good, guys. This is not good. They have some other information which I won't bore you with, but this is not good overall because what the moral of the story is, guys, is that a lot of multifamily complexes were bought by syndications, primarily. Okay, general partnership, limited partnership. Won't bore you with the details, but a lot of people, it made it easy for a lot of people, like maybe that weren't in very knowledgeable about real estate, or maybe they were, but they just didn't have the time, didn't want to mess with it, to invest on the limited partnership side of these 56, 100 million, $200 million apartment complexes. And what the idea is, guys, is that they would come in, they'd buy it hopefully at a discount. The rents are not at market rent. The units need to be remodeled. There need to be some new community structures and amenities added to the complexes. So these investor groups would come in and they would do all of these things, get it done with a 3 to 5 year time horizon, and then they would obviously increase value. Private equity firm or another large syndicate would come in and they would buy the complex for a premium. And that spread would be paid out to all the investors, and everyone makes a return on their investment. But now, what's causing a lot of us to go the other way is that the syndication that bought the multifamily complex a year ago, 2 years ago, et cetera, that had a floating rate, knowing it would float, never expected rates to go from, I don't know, 4.5% on their loan of $60 million to 8% or whatever it may be. Now, a lot of these people had bought ceilings that the rate could only go up so high over a certain period of time, but nonetheless, it still floats. And if rates continue to stay high, it's going to cause a problem in which they probably won't be able to make their debt servicing payments every month. And so there comes the problem. Is now is the bank going to restructure the loan somehow, some way? Or do they just simply take it over and foreclose on the deal? Hopefully the latter won't happen. Usually it doesn't, because does the bank really want 200 units, 200 tenants? That's a lot of headaches, right? So probably not, but you never know. You never know. So that's the risk when you invest in those kind of situations. So this is what this article is about. So 2024 is going to be kind of the year that we're going to test all this to see if this whole thing collapses, or if it struggles a little bit, or maybe somehow rates come down and it flourishes. We'll see. But I am an investor, full disclosure, in a couple of these. So we'll see what happens. We feel the ones that I'm in, I feel like that they did enough underwriting that was very conservative on the front end, and it was purchased correctly. So we'll see what happens with some of these deals. Okay. Few quick things, and we're going to wrap this up. Bank of America to pay $12 million in federal settlement over false mortgage data. Why does this always happen to the big three? Wells Fargo, Chase, Bank of America. It always happens. It seems to be happening. But basically, they didn't take the right information down on mortgage applications for a certain period of time. And the Consumer Financial Protection Bureau says you owe us $12 million for that. All right. In Phoenix, there's a new low-cost air carrier in town. I had no idea. I never heard about this carrier, but it's called Breeze Airways, and it adds a new Phoenix to California route. Okay, pretty cool. It's like a discount low-cost air carrier. But they are going to fly from Sky Harbor to San Bernardino now in California. That's kind of cool. There's a lot of San Bernardino people coming to Phoenix, moving permanently or buying a second home or second residence to change their tax address, maybe. I don't know. I don't know about that. That's between them and the IRS. But there's a lot of people between San Bernardino coming to Phoenix nonstop, especially moving like we talked about. So this is cool. One more low-cost option to fly back and forth for that 50 to 55-minute flight. Okay. Another one. This is going to be cool. I'm excited for this. Utah-based investment firm proposes destination steakhouse in Old Town Scottsdale. Here we go. A conceptual rendering of Swags, a multi-story steakhouse in Old Town Scottsdale, coming soon, hopefully. Okay. Just over a month after Scottsdale City Council, gave a continuance for a rezoning request, Swags is hopefully making their way to Old Town Scottsdale, which is going to be down in the area where all the fun stuff is, like the Maya Day Club and Dirks Bentley's Whiskey Row. This is going to be fun. So there's the proposed site, and I can't wait to maybe have steak there one night. We'll see. But you can never have enough high-end stuff in Old Town Scottsdale. You just can't, right? I mean, why not? Speaking of restaurants, if you're visiting Phoenix or you are going to move here, these are two restaurants that you may want to visit. I will tell you, I have not been there yet. So I need to do that because now they won some awards. I need to go check that out with my family or lunch or whatever it may be. But Phoenix Mexican and Thai restaurant make the list for some awards here by Esquire magazine. Two of the best restaurants in all of America, not just Arizona. Okay. So the Mexican eatery called Chitle, if I spelled it right, Chilte, I don't know. I'm horrible at Spanish, by the way. And the Thai spot called Lam Wong, both located in downtown Phoenix, in the area, two of 50 restaurants across the nation that its authors couldn't stop dreaming about, and they gave them a huge award. Okay. So Thai spot, Lam Wong, and the Mexican eatery, Chitle. I hope I said that right. If I didn't say it right, please correct me. I'm so bad at that. Okay. Last but not least, I'm a football guy. So I'm going to talk about football just for 30 seconds, maybe 60. Okay. What happened to Florida State in the college football playoff was a travesty, in my opinion. I know I'm going to take a hard stance on that, but you know what? Why not? If you guys disagree, I totally understand. Tell me why. But Florida State won all their games during a Power 5 conference in the ACC. That is a Power 5 conference, and they did everything right, but because they lost their starting quarterback, one guy, by the way, the backup is really good too. They lost one guy. All other 105 guys or so now have to suffer and not get rewarded by winning all their games and therefore being entered into the college football 4-team playoff. Instead, they put two one-loss teams in ahead of them, Texas and Alabama, which I could not disagree with more. Now, Texas, I think, should have got the 4th spot because they beat Alabama head-to-head. But Florida State, how do you lead them out of the top 4 college football playoff? That's a travesty. They earned it on the field, and they should have deserved to go, even though people think they would get beat because they don't have their starting quarterback. But they're still a good team, a real good team. So anyways, I digress. But here we go. Local news here. We have the Fiesta Bowl in the Phoenix area, and you have Oregon from the Pac-12, still Pac-12 conference, playing Liberty. Yes, that's right. You guys know Liberty is undefeated, but because they are in, I think, Conference USA, a group of 5 conference, the lower conferences, they can't go to the CFP, or I guess they could, but no one's going to put them in. And so they get a chance now to show off their football program on the big stage at the Fiesta Bowl in Glendale, Arizona here for a big bowl game in the Fiesta Bowl. Can't wait. I usually attend this because it's a blast. I love college football. So it'll be fun to see if the little underdog Liberty can roll and play with the Ducks. So that'll be fun, guys. Can't wait to do that. And by the way, if you who's your football team? Mine's Nebraska Cornhuskers, which is hard to admit right now because we're just not doing well. But who's your team? If you have one, let us know. Let me know in the chat. Comment below. Comment on the replay, and I can talk football for 30 minutes easily, which I will not do anymore because you're probably not here for that. But I am passionate about college football. It is the greatest game. So, anyways, guys, thank you so much as always. Hope you got some value out of this. If you're looking to buy, keep in mind, or invest, I know it maybe it doesn't feel right now, but the data would say probably a good time. So rates are probably going to come down next year. Demand's going to go up, and you know how that story goes. So, guys, thank you so much. We'll see you next week on the December edition, another December edition of YouTube Live, Everything Phoenix. Until next time, Phoenix, keep it classy.